Hello, good morning and welcome to my morning report analysis and videos with me, Richard Perry, market analyst at Hantec Markets on Wednesday the 10th of April. There's a fairly cautious look to markets today. We've got a lot of data to get through this morning and into the afternoon, and subsequently we're seeing a little bit of consolidation, nothing too significant in terms of direction across the dollar. If actually you look at the dollar index, it's pretty much flat on the day, and that's coming as you've seen these treasury yields which have just sort of started to roll over a shade in the last few sessions. Little bit of a more cautious outlook has been creeping into markets. We've seen equity markets just starting to roll over a shade, and that's coming as the IMF has announced that it's cut or downgraded its outlook for the global economy yet again for 2019. And that's sort of seen a little bit more of a safe haven move, and you've seen the yen, for example, performing much better against the dollar. You've seen gold, which is picking up at above $1,300 again, and as I said, equity markets just rolling over. And that rollover of equity markets could be the start of a corrective move, but for now, certainly the S&P 500 and Wall Street are holding up okay. I'll talk you through the CAC, which is my French CAC, which is my chart of the day, and that shows a little bit more of a corrective move. But certainly, it's in its infancy, as it were, at the moment, and not really developed yet. But very interesting to see if there is a corrective move that starts to take hold. Now, today we have got the ECB monetary policy, which is the main event really today, I think, and that's at 12:45 rates decision. No change expected on deposit rate at 0.4% negative. It'll be the press conference whereby Draghi outlines sort of the outlook really for potential for the teltros, how they're going to devise that program, potentially also how the ECB really does view this slowing Eurozone data that we've had in recent months as well. Let's look at the economic data. You can see here the UK data at 9 o'clock actually had a large portion of the data. You had GDP, better than expected. You had industrial production, again better than expected. But the trade balance slightly deteriorated. So mixed bag for UK economy there, but a very slight amount of sterling gains against the dollar. Then into the afternoon, as I said, we've got the ECB at 12:45, but also we've got the US inflation data, CPI, at 1:30. That's expected to come in line with expectations at 2.1% on the core. The headline expected to improve to 1.8%, and also we're looking out for EIA inventories, expected to have an inventory build of 2.3 million barrels, drawdown of 1.3 on the distillates and 2 million barrels on the gasoline. And then finally today we've got the Fed minutes at 7 o'clock tonight UK time. Again, we'll be looking for more meat on the bones as to why the Fed went with such a dovish tilt in pricing, or sort of guiding for no rate hikes this year, and also how the balance sheet reduction program, what its decision-making process was behind that. So yeah, it'll be a lot of interesting data points today. Now, my chart today is the French CAC 40. Now, French CAC has showed some corrective moves. Let's show you the daily chart first. Look at this big uptrend channel that we've been in since the beginning of January. But if you zoom in here, you can see several reasons why there might be a little bit of a more of a cautious look to the French index, whereby we had the shooting star candlestick yesterday, or you could also take it as a negative or a bearish key one-day reversal. You've got that coming as we've got the momentum indicators posting negative divergence on the RSI, also crossover sell signal not yet confirmed on the stochastics. So you could well see a bit of a retreat now within this uptrend channel. The initial reaction today has been reasonably positive, 0.3% higher, but until you see the market closing back above 5,492, which was yesterday's high, I don't think you can really go to believe that chart pattern has been negated. So today's move is suggesting that the bulls are not ready to give up their position quite yet, but certainly there is more of a corrective look given yesterday's session. You can see that on the hourly chart where the market, the momentum indicators have just become a little bit more correctively configured. MACD line is falling away, but if the RSI now fails back under 60 on the hourly, then I think that again would be a suggestion that there is more of a corrective outlook developing. So it'd be very interesting to see how this one goes, and it could be a bit of a gauge as to how global markets are reacting. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.